Today's episode is presented by Lodestar, the fee experts.
Hi everyone, my name is Elena Gardner with Lodestar's Lending Leaders, and today I'm joined by Joe Wilson from Social Coach, and we're going to dive into all things social media today. Welcome, Joe.
Awesome. Thanks, Elena. Happy to be here and appreciate you making some time for me today. It's great to be here.
Awesome. Well, we have more than a few questions for you today because social media for LOs is definitely something I think everyone's really thinking about right now. Social media, it's not something that's new to us, but I think for a lot of LOs, it is new. And it's becoming less and less exceptional for an LO to be using social media and something that's just they have to do. What's kind of your take on social media in the mortgage industry right now?
Yeah, well, I think you hit the nail on the head. That's becoming less and less just like it's expectations, table stakes right now for loan officers to be on social media. But you'd be surprised at the number of people that are not doing it. And I think there's what we've ascertained is there's a number of reasons why loan officers are not doing social media, a number of reasons why loan officers are doing social media, and they're like completely opposite. So it's really interesting. But I think you see, like with most sales tactics, right? There's a wide spectrum of variety of how people integrate that into their overall business planning. And social media is totally a sales tactic, right? It's a marketing tool, but it's really in the end, it's a sales tool. And I think a lot of loan officers that we talk to that are not doing it are not doing it for a couple of reasons. They don't know where to begin. They don't know what to say or what to do or how to do it or when to do it, right? So they're just like, it's almost, they're just paralyzed by not knowing what to do. It just seems so overwhelming to them. So they're just not engaging. And that's a interesting thing to have happen because it is actually like when you break it down and you kind of think about it logically, it's actually really simple to do to integrate into your overall business planning or your sales planning as a loan officer. But it can just become so overwhelming for a lot of people. They just don't even engage with it, or they engage with it once a month and then don't see any benefit. And they say, oh, well, social media doesn't work for me. So like, I'm just not interested. Right. And that can be further from the truth. It does work for literally everybody that uses it, but the benefits from it are going to be dramatically different depending on how much you engage with it. So we see loan officers that really go all in, that put this as a major part of their strategy, are having dramatic successes, right? They're getting direct consumers messaging them, DMing them online. They're seeing realtors refer them significant amount of business. They're getting referrals to other loan officers in areas that they don't service, right? You can have that be your main funnel of business if you want it to be, if you want to go all in on that. If you want it to be more of like a referral source, staying top of mind with realtors and other referral sources in your area, it could be that as well. Or it could just be something that helps you get your next job if that's what you're looking for as well. No matter what your goals are as a loan officer, you can utilize social media a different way to benefit yourself and your business.
And I think that leads nicely into kind of my next question here as well, is kind of, there's a lot of talk about personal brand, right? I have one, you have one. And I think honestly, companies have one as well. They have this company brand voice that you developed, both inclusive and exclusive of their employees. How can an LO develop their personal brand? And how can a company kind of develop that unique voice that doesn't just sound like press releases?
Well, I think you hit the nail on the head that how can you develop your personal brand? I think everybody has a personal brand, whether you think you do or not. And what your personal brand is everybody else's perception of you based on what they see out there when they're looking for you, right? So if you have not taken any time or thought about what you want your personal brand to be or putting any effort into it, your personal brand is, well, just not, he's maybe not doing that great, or she's just kind of like, doing something offline, right? So that personal brand needs development, needs thought, and needs purpose into to building that out. A strong personal brand is maybe more of what you're talking about. Like, how do you develop a strong personal brand? And that's over time. And developing a personal brand is just kind of knowing what you are, right? And it's continually posting or talking about the things that you are passionate about, knowledgeable about, and pertain to your business, right? So for me, I talk a lot about social media because I have a social media software business, right? I talk a lot about mortgages because I've spent the last 20 years in the mortgage business. So I'll talk about compliance. I'll talk about marketing. I'll talk about technology for the mortgage industry because that is what I know and have been practicing for decades. But I also, have personal side of me, right? I like memes. I like jokes. I like dad jokes, like I like talking with other people as well and like going to conferences and being a very social individual. And that's part of my personal brand, right? So if you take those, and if you follow me on Instagram, it's probably license plates, vanity license plates, and sunsets at the beach. And I'm that total weirdo that posts those all the time. But that's like what people like associate the personal brand of Joe Wilson as, right?
Mm-hmm.
When you think about that, those are the things that you're always talking about, you're always posting about, you're always doing. Whether that was my goal or not, that's what people perceive me as, right? And so you have to be thoughtful about when you do post things or you are doing those things, are you posting things that are going to be positive for your own personal brand? So when you think about developing a negative personal brand, though, it's like, are you talking about hot political topics, right?
Yeah.
Are you talking about, things that, are we talking about Kanye West or Ye and, the things that he's posted on Twitter? Are you saying those things? Are you talking about infighting within the mortgage business? Are you taking sides? Are you posting, bad things about people? Like that will be your personal brand. You're a negative individual. And that's not really necessarily the thing that you want people to be thinking about of you, even though you might be passionate about and think, oh, well, I have my First Amendment rights. I'm just saying these things because that's what I want it to be. Well, cool. You totally do have your First Amendment rights and you can say whatever you want, but just know that then becomes your personal brand and people are seeing that. And by people, I mean potential consumers. I mean, referral partners, people who want to do business with you might now become people that don't want to do business with you based on the things that you're saying. So your personal brand encapsulates all of those things. And so it's your duty to be thoughtful about what are you saying, what are you posting, and how are you doing it? How are you showing up? That becomes your personal brand.
Yeah, I think that's so important. Now to, switch.
But you also talk about company brands too, right?
Yeah, exactly. So I think one way to kind of look at this is lenders are fighting for rates right now, right? The lowest rate is going to win the business. How do you create some sort of meaningful brand when you're just fighting to get to the bottom line?
Yeah. And that is like, if we could totally answer that would be amazing, right?
Wouldn't it?
You have different types of consumers that are always that choose different lenders based on those types of things, right? I have a really, really good friend of mine who has asked me numerous times throughout our decades long relationship and about when he's bought homes for him and his family and things like that, like, oh, well, what do you think about ABC Mortgage Company, or can you refer me to a loan officer? And I've referred him to people that I know, like, and trust that would do a really, really good job, get a great rate, do great service, things like that. But this guy is all about the absolute lowest rate. It doesn't matter anything else. He's just always about the absolute lowest rate, and nothing would dissuade him otherwise, right? That's the only thing that he will ever go for. But that's because that's the number one thing that's important for him, right? So if you want to be like, you could literally build your whole brand off of being the lowest rate. You can go to the bottom, right? That could be you. But you could also be that person that is opposite of that, because there are other people who are more concerned about, oh my gosh, this is now a couple of months ago. The market is so tight and I need to make sure that I have the best offer, that I can do everything that is going to get me that home for me and my family, right? And so you can be that individual loan officer that is saying, here is how I make sure that your deals get done. I saw a lot of great social media posts about lock shop. I can't remember the terms where it's like lock before you shop, right? Or like have your loans underwritten and have your offer be as good as cash, right? Those are ways that are different than the lowest rate that will help attract more consumers, right? So
I know there was a great example of it was my mom was selling my grandmother's house. And, we got a few different offers, all to the same amount. And one lender had a kind of negative reputation for not being able to close a loan.
Yep.
And it, the realtor said, don't close with them.
Yeah.
Don't go with that because I've never had a loan close.
Yeah.
And you don't want that to be your reputation.
You definitely don't want that. And so that's like the opposite of being the low cost lender, right? The race to the bottom. So I think it kind of goes along with what you're saying of like, what's your personal brand? What's your company brand? What's your messaging, right? You can go for the lowest cost, if that lowest rate, lowest cost, if that's what you want. If you want to deal with those people, go with it, right? But if you want to be working with those realtors who control, whether you like it or not, like a significant portion of the business that's going out there, you need to be thinking about, all right, how am I positioning myself as an originator to be attractive to these realtors that run the business, right? And just a quick side note, like when we started Social Coach 3 years ago, my initial assumption was we're going to get all these consumer loan applications, and it's just going to be all direct consumers coming in. And as we help these loan officers really grow their social media presence, it's going to be all about those individuals. And what it's really turned into is it's all about the realtor relationships, the builder relationships, financial planner relationships. And they are seeing those originators more often. And they're referring the originators that are more present on social media more often than those that are not, because you're always top of mind, right? So when we think about how do we get more business from social media, well, where do you want that business to come from? That's the important question that you have to ask yourself. If it is those traditional methods of realtors, builders, et cetera, referring you more business than just one transaction, then you need to tailor your messaging towards them. If it's realtors, let's talk about how I'm an expert in the industry and how we've got great products and services, how we close on time, how we have these cool, like unique products that can help your borrower get the home above anybody else, right? You're sharing those types of things versus I've got the lowest absolute rate. So it really comes down to, again, like, what do you want to do? How do you want to approach those things?
And one thing that we really loved when we were digging through you guys' website is you kind of refer, how do you help lenders who are more seasoned?
Yeah.
I did use air quotes for those listening. And I think that's so important, right? We talk to these people, I've had a mentee who runs a mortgage marketing department.
Yeah.
And they're like, I can't get my, some of my LOs to get on board here.
Yeah.
They want those one pagers to hand out with the donuts.
That's right. I had one of our clients, the VP of marketing. We were doing a presentation together one time, and at like a TMC show or something like that. And she's like, let's all sit here and talk about the F word. And everyone's like, the F word? Is she talking about like compliance? She said, no, flyers, right? The one pagers. Like, I have all these people, all these more seasoned individuals at my company want just flyers. And now I've had to train them to just transition them to more modern approaches like social media. But you're right. How do you get those more seasoned individuals to, or tech-averse individuals to engage on social media? And it's a tricky thing because there always are going to be crusty people that just don't want to do it. Cause they're like, I'm not doing that. I'm not going on there. I'm not doing anything. And that's cool. Like, look, you can't convince everybody to do certain things just as much as you can't convince them to send emails or to, take a, online loan application, right? Like, there's just certain things that certain people will not do. Now, what we've done, and I don't want this to be like a total pitch for Social Coach, but like one of the reasons why we built this software is specifically for to help everybody in the organization benefit from social media without having to truly engage with it as much, right? Now, those that do engage more are able to get way more out of it. But what we've done is we've said, all right, look, if we can get loan officers to log in one time to connect their Facebook, Instagram, LinkedIn, Twitter, the marketing team can automate posts out to their platform and not have the same thing go out to everybody at the same time, like super scalable, the back end, making it really, really easy for the marketing team to help those loan officers build their personal brand, their social brand, without them having to really do much of anything. Like, if you can get them to connect their accounts one time for 10, 15 minutes, then they'll never have to log in, which is awesome. But then training them on how to engage and create their own personalized posts I've seen some amazing folks that are in their 60s and 70s, Elena, like actually like say they'll never go on social media, but then like when they started to see loans and deals coming in from it, from their team auto posting for them, then they started to like, okay, now I'm going to go all in on this because you've proven to me that it works. Right. And so now they're starting to engage. They're posting personalized content along with like company content out there. And it's amazing to see. So it is possible. Don't think that everybody in your company is not going to do it, because they will. You just have to prove it to them. And you can do that easily through automation.
Yeah. And I think that's so important. And I think, you know, with automation, I think one of the great things that comes with that is compliance.
Yes.
Right. Lenders, it's a big fear. How much can you say? What can you not say? Right. In a TikTok, right?
Yeah.
Do you need to put your NMLS number in the bottom corner? What needs to happen there? So I think that's, you know, a big thing. How do you guys monitor compliance and still give LOs freedom for social media? Yeah,
that's such a good question, and it's one that's near to my heart. You know, compliant. A lot of companies think of social media as the Wild West still, right? They're like, all right, we're just either going to look the other way and hope it doesn't happen. Nothing, you know, the CFPB isn't going to like rear its ugly head today. But now they're like, oh crap, we have like a more, you know, we have administration right now that is more interested in these things right now than the previous administration. So their heads are up and back the other way because they need to make sure that they are in compliance. And then we have other teams that are like, you know, all right, just go out there and lock it all down because like we're just too worried about anything, right? And there's a bunch of people in the middle. It's the spectrum, of course. But how we manage social media compliance is we allow the compliance teams of these companies to really have a proactive compliance filter on top of their social media posts. So everything that goes out there is already going to be approved. If it's automated, it comes from the company. We know it's going to be fine. But we also allow the individual loan officers to take the content that they have and put their own personal spin on it, whether it be an image or their own caption, making it themselves, along with their own custom hashtags and links and all that kind of stuff. But what we've done, I think is pretty cool, is we said, all right, there's two buckets here, right? There are words and phrases that are sometimes okay, sometimes not okay, right? Like the word free, for example, right? I can say, hey, come down to the park for some free ice cream, but I can't say I'll get you a free appraisal, right?
Yeah.
I'm going to say the word free, I'm going to highlight, if someone tries to type that in a caption, it's going to highlight it in yellow and it's going to say, hey, just make sure you're using this word properly, but still allow you to post it. But if they say free appraisal, or they say I've got the lowest rate, it's going to be that other bucket of things that are not allowed ever, right? And it's going to completely block those words and phrases that compliance and legal and marketing have deemed that are unacceptable. So none of those will ever get out there. And then we monitor all the posts that are going out for any of those words or phrases that come from anywhere, and give a whole review queue and way to fix all that kind of stuff for the marketing team and those loan officers to make sure that they're compliant. And then have, you know, and really what it comes down to it, auditors and examiners are looking for the fact that you're actually trying versus just not trying at all, right? It's like you have controls in place to monitor and proactively try to make social media and your advertising better. And then do you have ways of monitoring it and ways of rectifying any potential concerns? And if you have those, then you're good, because they're like, all right, we know some things are going to slip through and you know, you just fix it, right? But if you don't have those controls in place and you have just like way big problems, you're going to get fined. But if you're at least trying a little bit, you're good. And so we've gotten way above at least trying a little bit, but we've got a great platform to help companies manage their social media risk and liability.
And I think that kind of brings me to the next thing, which is, you know, what is too far? How much is too much to integrate social media into the mortgage process, right? You know, I think, you know, we see that a lot is, you know, we're closing costs, right? We're at the point of the LE. So we're pretty, you know, when we're talking about your sales funnel, we're pretty far along that, right?
Yeah, you are.
So what point is too far, do you think?
Interesting question. I think that talking about social media is really top of funnel activity. But it's also at the very end as well, right? So you're using it as a tool to kind of help generate new business and build your own personal brand as an individual loan officer, but also the brand of the company, right? And we haven't really talked about that yet, but that's one of the biggest things that you can do as a company. If you want to help grow your overall company, turn your employees into, your influencers, right? You have this whole team of people that can promote ABC Mortgage Company or XYZ Bank. Use them, and it's a win-win situation. You get your brand recognition, they get the personal brand recognition. It's great, right? But it's all about brand recognition. It's about driving, actual ROI for your company. But in terms of what process, where in the, the manufacturing process of a loan do you incorporate social media, and where is it too far? I think when you're talking about the benefits, the education, that's great, right? When we're talking about closing costs and rates and APRs and the fine minute details, I think that is sometimes too far, and a lot of compliance minds will agree with you on that, right? You don't want to be talking about rate without an APR, right? And even then, it's that's very there are a lot. If you got 10 compliance people in a room and said, are rates okay to post about, you're going to get 10 different opinions, right? You're gonna have people say, oh, go for it, it's fine as long as you put the Fannie Mae average, right? You're gonna have others that are gonna say you must include the APR and a major disclosure at the bottom that is at least a 14-point font. And people say, oh, you don't need any disclosures, you just put it in the caption, right? And so it just depends on what your company's appetite is for those types of things. But I would say, you got to gut check it against what your appetite is for compliance and risk. But in my opinion, personally, and I'm not an attorney, so take this for whatever it is. Talking about rates and closing costs are things that I would personally avoid if I were operating a mortgage company or a bank right now, because it's too much of a gray area, and I would just want to stay away from that. And honestly, it goes back to our earlier discussion, Elena, where it's do you really want to be the rate company, right?
Yeah.
And if that's what you want, go for it, and then figure out where your appetite is for risk and go all in on that strategy. But I would say, stick to educational posts, stick to community-based posts, stick to personal branding for your loan officers, and then also celebrate the wins when you get the person in their home. Share pictures of that home with them if they agree to do that, right? Talk about your partners that you're working with. Help promote other people, your escrow companies, your title companies, your attorneys, your closing company, whoever it is, the realtors, everybody. Talk about them, help promote them, and tag them in those posts, because then you'll help them, but you also help yourself, because then they'll see their audience will see you as well. But I think there's so in the end, I mean, it really just depends on what your risk and appetite is for the legal thing.
It's always a fun thing for us as kind of the closing cost experts. We really push for increased clarity around closing costs, and I think it's something that a lot of lenders, it's a scary thing to do. And we're seeing it move up the pipeline with POS integrations and all of that. And that's, you can get a quote from a lender now in 20 seconds with some of these POS systems with rates and, closing costs and all of that. And that's absolutely amazing. And I hope we see more of it, but that's in a very controlled environment versus a social media post.
Yes. And I think that the way around that, because I think that is super, super important to be talking about, is your closing costs, because a lot of people don't talk about that, right? And when we're talking, and again, back to that rate discussion, if you're talking about rates and you're not talking about closing costs, you're leaving out a major part of the discussion, right? The overall cost of the loan is not just your interest rate, it's all the fees included, right? So I think the social media post isn't what are the specific costs that would be involved with it. And you could do it.
You can go down to the dollar amount. We don't recommend it.
You can go, you could say, and I've seen this actually be very successful too. Here's what the cost would be today for a borrower with this credit score, and this much debt or whatever, and run a scenario and show that and show the costs on there, you can say that this is what it would be for the average buyer now. And with a major asterisk by it saying your rates and fees may be different than this, right? Yeah. But I think the cool thing that you could do though is share with your audience as a loan officer, say, hey, I have engaged with Lodestar and like I'm able to get you within 20 seconds a very accurate picture of what your actual cost will be, not just a guess, right? And I can totally see it being a post, right? It's not a guess. These will be your fees. Call me and I'll get these for you right away, right? That is the post. It's not necessarily like this is what your fees are being, because it is also different per property and per individual.
Yeah, and you just don't know, and the buyer doesn't necessarily know the questions they might need to answer or anything like that. But I think loan officers offering that information that they can, right, more regularly is so valuable. And as we wrap up here today, I'm going to ask the big question here. So a Lodestar is a guiding light in the sky. That is what our company is named after. And we want to celebrate the things that inspire us. So who or what do you consider a Lodestar in your life?
Yeah. Oh man. Well, I've had like so many amazing mentors like along the way that have helped me like personally grow my career and be able to, start as a loan officer many, many years ago. And, and before that, actually, I did like marketing for a couple of realtors before I even was a loan officer. So like I've done marketing, I was a loan officer, switched to technology. I've had a lot of people like help me all along the way. But the one like Lodestar are honestly my parents. They are like, they're the ones that have been with me obviously forever, right? Because they're my parents, but they're the ones like from both personally and professionally that have really guided me as that North Star, right? As that Lodestar in all facets of my life. And particularly like from a business standpoint, like my dad has always been in software and, I talk to him like 3 to 4 times a week about just different business problems that I have or opportunities and things like that. And he's always there for me. And my mom, actually the same thing. She was like, in her career, she was a superintendent of a school district and is a total like boss, right? She's like incredible. So I've gotten a lot of like amazing tips and life tips on how to be a better leader, be a stronger individual from my mother, right? So I've been blessed with amazing parents that have guided me and been able to like do everything along with them. And it's incredible to have such great guiding lights in my life.
That's amazing. Well, Joe, thank you so much for joining me today. Where can people find you?
Yeah. Well, find me. You're seeing this probably on LinkedIn. So, and hopefully Elena's tagged me in it. But follow me, Joe Wilson. Email me, joe@socialcoach.io. Go to socialcoach.io. Check out our website, all about how to manage your company's social media presence. You can also find us on Instagram, Facebook, and every other social platform, obviously. But I'd love for you to connect with us there and learn more about your business.
Awesome. Well, thank you so much again for your time today, Joe. If you've made it all the way to the end, we always say, please like, subscribe, and share this podcast. It really helps us out. If you are listening, if you on like an Audible or a Spotify, Apple Music, podcasts, all of that fun stuff, please give us 5 stars and we'll see you next week. Thank you for listening to the Lodestar's Lending Leaders podcast. Please like, subscribe, and rate us 5 stars anywhere you get your podcasts. A special thank you to the Lodestar podcast production team, Jim Paolino, Tim Austin, and John Gardner.